Welcome to part 10 of our financial statements video training. In this video, you will learn the differences between the following income statement formats: multiple step, single step, comparative, and amounts expressed as a percentage of net sales. Please print the PDF handout shown below this video as it will be used throughout the training.
Okay, now we're going to move to the handout with the heading Income Statement with the 2 in parentheses. And on this handout, you'll see 2 income statements side by side. The one on the left is similar, maybe a little more condensed, but similar to the one we just reviewed. Multiple step, multiple subtractions, all kinds of lines. The one on the right only has 1 subtraction, hence its title is single step. The single step statement on the right has us report the operating revenues, like sales, along with the non-operating items, such as gains. So as you can see there, we've combined net sales with income from investments and came up with a total of revenues and gains. We're not segregating like we did on the multiple step. And then look at the expenses and losses. We've got the operating expense, cost of goods sold, the SG&A, which is operating, but then we also listed the non-operating interest expense and the loss on the disposal. And we total those up. In one step, we get to the bottom line before tax. So all the revenues and gains minus all the expenses and losses gives you the $111,832. And then from that, we try to match the expense that pertains to the items shown on this statement. And again, that expense may not be the amount we pay this month or this year, but it is the expense that matches up with these items. Next, we're going to look at the handout with the heading Income Statement 3. Corporations with stock traded in the U.S. on some stock exchange are required to issue comparative income statements, but their comparative income statements actually show a total of 3 years of numbers. So the current year plus each of the 2 prior years are going to appear on an income statement. So we noted earlier it's nice to have some type of frame of reference. Well, the Securities and Exchange Commission felt it'd be nice to have a little more reference than 1 year for the income statement. So they're required to show 2 years. Now, I'm going to present on this handout just 2 instead of 3 years. So on this handout, we're showing the current year plus only 1 of the prior years. And so this would be more typical at a smaller company, that they're not going to do this all, but the publicly traded ones are required to do more. And I also decided to put the percentages next to all the amounts from these 2 years of numbers. And the reason is that much of the accounting software does this automatically, and small business owners are going to see their income statement with those percentages. So if they don't have it, okay, but we're going to assume they got it, and you can see how helpful it is to see these numbers now with percentages. Let's focus on the column, and of course our heading says for the 3 months ended March 31st. So it's really not the full year, it's going to be the 3 months ending March 31st. And we see the sales there were $1,106,000, and then next to it we show the percentage. And that percentage is the result of taking $1,106,000 and dividing it by $1,106,000. So it's 100%. Now when we go to the second line, where it's the cost of goods sold, we had $805,000 from our earlier statement, and if we divide $805,077 by the amount of net sales, that top line, it's 72.8%. And the result of subtracting gives us the gross profit, and we can quickly see that the gross margin is 27.2%. So the advantage of having percentages on your statements is that the operator of the business or a manager, the owner, whoever, can quickly see what's happening to their margin, and with the comparative income statement, it's even more insightful, because right before them they can see for the same 3-month period, January, February, and March, the gross profit margin was only 26.4. So we've improved our gross profit margin. So by having comparative and by having those percentages, the income statement becomes much more useful to the readers. Now, the published annual reports won't show this for big corporations. You'd have to do your own calculations. And they'll probably give you a single step instead of a multiple step. So the big corporations have brevity and holding back a little bit. The individual companies should have lots of detail readily available for the managers. Okay, so then we go and list the rest of the expenses just like we had on the income statement. We're going to divide every amount by the net sales for that period. So we'll go right down the line and divide every amount